Good morning, Predicted Trades family. I hope everybody's doing good. Hope you all had a great weekend. Time to get back to work. So, after Friday's big drop, we find ourselves back down. Just to put it into perspective, let's see. We had a nice rally up. So I'm moving over to this little 4-hour chart. Nice rally up. Ran into the daily 200. Almost ran into our trend line from the highs of this year. Started a sell-off. Gave us a nice rally last week. But we rejected 4,200. And now we're back down near 4,000. As you can see on my key levels, we are in between the next levels down and the levels we tore through on Friday that are above. As we come over and look at our kind of our normal time frame, 30-minute, we fell through the daily 100 on Friday, and this morning or overnight, with a gap down, we pretty much tag the daily 50. We now find ourselves basically pinned between this daily 50 and the daily 100 above. The daily 100 sits at that first Keltner down, right around 40.68, right in between some key levels, 40.56, 40.71. We've got our daily 50, that sits below with the second Keltner down, right at about 4,000. And below that, our third Keltner down gets us down to about 39.26. So, when we look at what we can have in store this week, first off, let's pull over our economic calendar. Not a lot going on this week. Nothing today. A little bit tomorrow. But it all comes out like 9 a.m. and then 10 a.m. Wednesday, we've got a little bit of employment data and PMI. Thursday, jobless claims as usual. Some more PMI. Friday, non-farm payroll. That's kind of, light week for us this week. So, not a ton that can really throw us in one direction or another. So, what can we see in store for this week? We had such a significant drop on Friday. I'm sure we can expect some more downside because a lot of sellers piled in, not only to last week's options, but to this week's. But we've arrived back at some key moving averages. So, let's see, for at least today, if the daily 50 and daily 100 can contain our price action. Let's see if we can, we've got some nice 30-minute squeezes on every index, so that'll be a good guide as we go into open. As we like to teach, play that range until the range breaks, meaning if we take a dip to squeeze bottoms and the daily 50 and we can hold, then I'll be looking for long positions up to the top of squeezes and to break out of that range. But as we hit the top of squeezes, I'll be locking profit long and I'll be looking at shorts back to the daily 50, back to 4,000. Let's see, if we start to break down further and lose the daily 50 and that first Keltner, we do have third Keltner down below after some key levels in the 3900s. If we can break out of the squeeze to the upside, 40.56, this daily 100, 40.71, and, if we can actually get more of a cover pop that turns into a little rally, then we're looking to get back to 4,100 for a test. It's kind of our last settling point before just heading down the rest of the afternoon on Friday. But we could easily just have an inside day today while everything is digested, while this big drop is digested, profit taken, and repositioning. If we do retest 4,100 before heading lower, it might be something that takes today, maybe into tomorrow or Wednesday, to get a rally up to 4,100 before heading back down. We definitely don't want to just start piling into shorts at open. There will likely be a little bit of relief that happens. We do have 3 days left in the trading month. 1, 2, 3. And then we start September. We also have a 3-day weekend coming up and a short week next week. Just something to keep in mind. After such a big move, we might just need to settle for a second, and we are between some key moving averages. So let's see if the daily 100, daily 50 can contain us on ES. On NQ. On NQ, basically the same. We have arrived at a key level. That's 12,500, 12,458 that we are chopping around. NQ did gap below its daily 50. So basically would be looking for it, and it has this second Keltner sitting just below the overnight low. So, looking for us to hold, squeeze bottom, this daily Keltner around 12,400. Start to pop back up to and through that daily 50 to fill the gap and get back between the daily 50 and daily 100. To the downside, if we reject the daily 50 and roll back over and start taking out pre-market lows, or overnight lows, and the squeeze bottom, the second Keltner, we have our third Keltner, look at that, right down, perfectly overlapping our next key level. I don't try to throw a lot of levels at you guys. I try to focus on key levels to say where are we at, where can we go to. So if we break down that third Keltner and this 12,100 big key level, if we can hold, squeeze, this 30-minute squeeze after open, hold this second Keltner, start to get a pop, looking to get through the 50, fill the gap, get back to the 100 at least. And like on ES, we said getting it back up to 4,100, which was kind of the last settle point. On NQ, that's 12,800. That we'd be looking to get back to for that midday settle for the upside. Alrighty. Link this real quick. There we go. On the ready. Like NQ, gapped below the daily 50. Come on. Well, okay. Sorry. Strike that. We still have the daily 50 and daily 100 below. So if we can hold overnight lows and squeeze bottom, looking to get back up and fill that gap, which would be getting back to 1900. 1900, a huge key level on the ready. Even when we sold off a couple of weeks ago, we held above 1900 and took back off to 1950, 1960. We're back below 1900. And you might even say kind of gapped below. So let's see if we can hold our 30-minute squeeze bottom, start to get back up to 1900. Anything past that, that midday settle point, kind of around 1915, call it also 1920. And we have the daily 21 right there. That's if we get a cover pop to fill the gap and it keeps going, right? But if we start to roll over and lose our overnight lows, we have that daily 100 and daily 50 just down below, straddling the second Keltner for targets to the downside. YM. Looking a little bit more like NQ, gapping below the daily 50. So if we can hold overnight lows, 30-minute squeeze bottom, the second Keltner, get going up above the daily 50 to the squeeze top. Just outside of the squeeze top would be kind of filling the gap back to 32,200. We have the daily 100 up above at 32,450-ish, where that first Keltner sits. So if we can hold second Keltner, get back above the 50, looking to get back to that first Keltner and the daily 100 for a test. With YM NQ below the daily 50, ES in between, and ready above, we could see rotation where the ready goes down to get in between these zones, where NQ and YM come up to get in between the daily 50 and 100, and where ES just chops in between. So be ready for rotation. Apple fell from our stack moving averages down to the first Keltner. Already at the pre-market lows, almost down to our 160, 159.5, and that second Keltner, which sits at 159, creating a zone below, so that if we start to slip down into our squeeze bottoms on the indices, we'll likely see Apple come down to this key level, where we have things stacked, 159, 159.5, and 160. A big key zone below. Should we keep slipping, looking to settle there. And if we can get going back to the upside, filling the gap, we'll be getting back to 163.62. Around 164. On Apple, our daily 100 and daily 50 sit down below at the next key zone below 160. So should market continue downside and we lose 160 on Apple, this 159.5 key level, we can expect that the next stop is the next key zone where the daily 50, daily 100 sit, and that third Keltner. So from third Keltner on the upside, back to the mean, and frankly in a day or maybe two, we could be back at third Keltner and these moving averages for a bounce. Also, one thing to keep in mind, this trend line that you see over here on ES, not to jump back to ES, but these trend lines below are trend lines from low of year. So we can get further down near 3,900 to test those trend lines, because we are basically in a wedge. Trend lines from high of year is this pink one, trend lines from this recent sell-off, and trend lines from low of year, putting us into a wedge. So I know a lot of folks that are bearish and see a big drop like Friday think, ooh, next stop, new low of year. But we do have a trend line. We are in a wedge that we can dip down to the bottom, start to come back to the top, and just get tighter and tighter. Just kind of leading into that September could be a bit of a wedge month. Doesn't necessarily mean we're going to set new low of year. We just have to see what happens when we get to these key levels in these trend lines. AMD. AMD gave it all back. And let's see, back down near the daily 50 and these couple of key levels. So looking for the daily 50, these key levels to hold, and to get a bounce back up to test 91.91 where the daily 100 sits. We have the daily 50 below. So like everything else, we can chop between those. We're also at the bottom of a daily squeeze. That's one thing on a lot of names. If you notice the daily squeeze column over here, a lot of names, we have daily squeezes in place that can provide support. And last time that we had a big drop like this, we did not have those daily squeezes to support us. So these daily squeezes on a lot of these names could potentially provide that higher low that we're looking for off of low of year, right? Higher low to continue to the upside. Amazon. Back down near 130, only down at first Keltner, gapping a little below it. And we've already wicked overnight down near our daily 100, daily 50. So we've got these magnets below. Should we see more downside or weakness in Amazon? First stop, this overnight low. On our way to this daily 100, daily 50, spanning, 124, 125. We also have that second Keltner there. But if we can hold, start to see a little bit of a cover pop, looking to get back to 130 where that first Keltner sits, and beyond that like 132, 133 where that last settle point was. BA. BA made it right back to our key zone and moving averages gapping below. Looks like it's trying to hold last Tuesday's highs pre-market. And we do have some consolidation from Monday and Tuesday here around 160. Also, we have a daily squeeze. So let's see if BA is going to reject this zone and roll down to this daily squeeze back at last week's lows. For all that we, all the drop we saw in the market, you'd expect BA to be below last week's lows, but held up. So let's see if we reject this zone, roll down to last week's lows to hit this daily squeeze bottom and this first Keltner for a reversal. If we can get through this zone, we do have the daily 21 right in there, daily 8 and 15 above. So on any upside, looking to get back into the zone, back over this 164, and in between the daily 8 and the daily 21 and daily 8 at least. On CAT. CAT made it back to the daily 21, gapping down to our next key level. Let's see if this 189.5 can hold. The daily 50 sits still way down further at 185. And on CAT daily 100 still above. Just make sure we're, looking at 100. Yep. So for CAT, let's see if this key level can hold. Start to send it up to fill the gap back to the daily 21. Any past that, back to our key level, 193.8. If we start to lose this key level, the daily 50 is below, near 186. Google. Googly. Rejected that daily 50, back down through first Keltner, now at second Keltner. I'd say out of tech, a little bit of, Google's been a little weaker. So not surprised to see it in between second and third Keltner. If we're going to see more downside, that third Keltner is the target, around 106.5. If we can hold 108, start to work our way through some of this pre-market action. Back to 110. Looking to get back to 111, 112, kind of that zone that we settled in midday before selling off further. And we've got our moving averages up above if we start to talk about recovering that sell-off. GS. So GS down near our first Keltner. Let's see if 332, 330 can hold us. Start to send us back up to fill this gap. Back to 336. Beyond that, the daily 21. To the downside, if we start to lose 322, or I'm sorry, 332, 330, 325 would be the next stop. JPM. For further downside, looking for that second Keltner around 111.5. If we can hold, say, 113, cover pop would get back to about 114.5, and we have our daily 50 up above. That's kind of the targets to get back to. Meta with the gap down, not looking so bad. It's actually trying to kind of hold last week's lows, kind of right at it. So let's see if 159, 158 can support and send Meta back up to fill the gap back to 161 and 162, where that first Keltner sits. Beyond that, moving averages that we rejected. Obviously, when I call out these levels, I'm not saying today we're just going to engulf Friday. That was a big sell. We'll see some cover pop action, but could it be an inside day? Further downside, we still have second and third Keltners. 155 and 150. Microsoft. Well, we've already had a wick down to that third Keltner. And we've already had a wick up to fill the gap. Let's see if 264 can provide support. It's where that third Keltner used to be for a whole week. Let's see if 264 can provide support. Start to send us back to 268 to fill the gap. And we have the daily 50 and 100 above. Further downside, 260, where that third Keltner sits. I would say on Microsoft with that big wick down and up, we should probably expect an inside day between those wicks. Netflix back down to 220. Only to the first Keltner down. We have the daily 100 just below at about 216.5. So if we do roll over, that would be the first downside target. We have the daily 50 down around 210. So a zone below between those two that we could get down to today or tomorrow. If we can hold 216.5, that daily 100, if we get down there, could get a bounce back to fill the gap. Actually, Netflix looking like it's ramping up to fill the gap already. And all things said, only went down about 10 points on Friday. And still well above 200. So Netflix holding up decent. Let's see if we can hold this first Keltner or this daily 100. Get back up to 225. First stop, 227, 230. The video. Definitely got beat up hard on Friday. Down at that second Keltner around 159. Let's see if 158, 159 can support. Start to send us back up to fill the gap back to 162.5. And if we can get back to this daily squeeze at 164, still intact. So we could get a cover pop back and settle at that daily squeeze. QQQ. QQQ, doing a good job so far this morning of trying to hold the daily 50. Let's see if it can provide support. We've already had a wick up to fill the gap, so let's see if we can do that during cash session. We're going into a little wedge here in a 30-minute squeeze. Let's see if we can have support at the bottom of that squeeze. And at that daily 50, start to send us back up to fill the gap and at least get to the daily 100 around 308. Past that, key level above 311, where we settled and was kind of low of week before the drop. I don't really want to cover these names, but yeah, Roku off the lows of last week, only got up like $3 and then right back down. It does have a daily squeeze in place, down around 66, 65. So let's see if that provides support, but this name's been getting beat up. Shop, not a lot of interest either. Another name that's been getting beat up for a while. Only made it back to the daily 8, whereas a lot of things made it back above all these moving averages, so definitely not looking to play these. Shop, we've got that psych level of 30, just below second Keltner, 28 where third Keltner sits. Snow. So snow, relatively strong compared to everything in the market. We do have that gap from earnings. So if market's weak, or we see some more rotation, snow could dip down to the top of that gap fill and hold long enough for the market to kind of settle and start to pop. But if market continues to look weak, we do have this gap from earnings that could be a good catch-up trade on one of the only names that remain decently strong. So, probably going to keep an eye on snow this week. Definitely, if we see some upside in the market, I want to see if they're rotating into snow to try to push further. It is near its third Keltner. Also want to see if we just dump quickly to that gap top and it, give a little bounce, allowing us to potentially get into some shorts to play it back 2 moving averages and maybe fill that earnings gap. So a decent potential catch-up trade here, depending on investor sentiment. On SPX. Hey, there we go. So SPX rejected that gap up on Friday with that Powell crap and took off and filled these gaps to the downside. Normally I'll take those away after we fill them, but I'll just leave them in case we start to see a cover pop to get back to the daily 100. We could reject those zones and head down. Let's see, we made it down to first Keltner. Going to be opening a little lower, 30-ish. So we'll be opening a hair above that second Keltner down. We are between the daily 100 and daily 50. So downside target 4,000 to get to that daily 50. Where we could catch a bounce and maybe even come back up to fill the gap. Key level at 40.62 with that daily 100 making a zone above. And we got our key levels below. SPY. SPY between the daily 50, daily 100. Got our 30-minute squeeze. If we can break through pre-market highs and push a little bit, we'll be filling the gap back to 405. Past that, we've got the daily 100 at 406.5 with that first Keltner. And any further past that, we've got 410 as the last settle spot on Friday. Downside, we've got that daily 50, psych level of 400, and past that 395.8, which is a big key level. Let's go to Tesla. On Tesla, we are down at the bottom of this daily squeeze we've been talking about. We have that first Keltner in there, just a hair below that overnight low of 280. We've got that Keltner at about 278.5, we'll call it. So let's see if this daily squeeze bottom, psych level 280, 278, where that first Keltner is, can provide support like it already has to start sending us back up. Getting back to 288 fills the gap. So up here, got that psych level of 285 in between. Past 288, we've got the daily 21 around 290. Let's see if this daily squeeze, which is nice and thick, can provide support in a big key name like Tesla and start to cause a reversal. I know we had a big sell-off on Friday. That can just be to get us back to our next reversal point. So watch this daily squeeze on Tesla. Let's see if 278, 280 can hold. Below that, we do have that daily 100 just at the bottom of that squeeze. So we could push into the bottom of this daily squeeze, tag that, and catch a bounce, still keeping our squeeze intact. And yeah, we'll likely be in this daily squeeze for a number of days as it's getting thicker and thicker. We're near the bottom. Let's see if we can catch that bounce. VIX. on Friday, as we saw it tear from 22.5, 22, all the way up above 25. We joked we'll probably wake up to it at 30. Not surprised to see it gap up to 27.5, 27, 28, key levels. And geez, from the mean, first, second, third Keltner sits above at our 28.8. So, for upside in the market today, we need to see VIX roll back down to 27, start to give out the gap lows, and potentially come back to fill the gap to the daily 100, and where we closed at around 25.5. So for upside in the market, need to see us come back down, fill the gap, and test the daily 100, or at least lose 27. For further downside in the market, likely going to hold 27, get up and take out 27.5, on the way to 28, 28.8, where that third Keltner sits. And, I know after a big drop, we're going to be leery to play long. But it's kind of hard for the market to just beeline it from 4,200 down to 3,900 without any bounces, right? So I'll always be ready. And we have our squeezes in place, our 30-minute squeezes on the indices, providing us some direction at open here, some range to work off of to see if we can break out to the upside and fill some gaps. Get back to last week lows, or if we're going to reject and continue this downtrend. Use your moving averages on a number of different time frames, right? We're below all of them, obviously. But like the 4-hour 8 up at 40.67. We talk about continuation. We can pop up to test these moving averages before the next leg down. So, hopefully this is helpful for everybody. Thanks for tuning in. We'll see everybody in chat today. All the Beast tools are already posted. You'll notice that we have pushed down into territory we have maybe not been in for a while. So for today and maybe tomorrow, there might be a little less strikes that have Beast, but not all names tanked as far as the market did. So you can use the app today to look around and see what strikes are included. And I need to update the app right after this so that it's fresh with everything loaded in the Beast tools. But I'd say by 9 a.m. that app will be ready so you can look around at strikes with Beast. But yeah, good luck today, folks, and we'll see everybody in chat.